Ladies and gentlemen, welcome back to another very special money-focused segment with Alexforbes. Today, we're speaking about a very crucial topic, which is managing and mitigating risk regarding retirement plans. Extremely important, and we have Rob Rainier, the Regional Executive for Individual Consulting at Alexforbes in the Eastern Cape. Good sir.
Awesome. Thank you for having me, Udi.
Thank you for joining us.
Yeah.
And so, to kick it off,
Sure.
Market volatility is a really big subject and challenge within the space. What can one do to work around that and mitigate the risk when it comes to retirement plans?
No, absolutely. I think, as we were saying earlier on, the most important thing is to have a retirement plan. Let's start there.
Yeah.
So once you're saving, know why you're saving, and if it's for retirement, importantly to have that outcome. When it comes to market volatility, I think the time in the market, in other words, the amount of time you're spending in the market as opposed to time in the market is really important. Often you find folk choosing one particular type of asset and thinking that's going to make them rich very quickly. That's definitely not the case. So to mitigate risk, I think the important thing is to have a balanced view. A portion of your money into equities, as an example, some of your money into bonds, some of it into property, some of it into cash. And most asset managers these days actually do a combination for you. So you don't have to sit there and think about choosing how you're going to put it together. It's been done for you. The most important thing is to start making that contribution and let the experts actually manage that portfolio for you at the end of the day.
And that's
but importantly,
really interesting.
to be balanced. To have a balanced view, not just having a specific one view at the end of the day, because that definitely could impact your outcome.
Amazing, and we'll touch on that actually a bit later. Another very important thing is inflation, right? So inflation is a big role player when it comes to savings and being able to navigate around that. What are some of the strategies that one can implement to also kind of protect themselves against the impact of that?
So good question. Inflation is important. It really means when you're going to buy your goods at the end of the month after you get paid, inflation chews away, meaning you're either going to pay more for the goods if you want to keep it the same, or you're going to get less at the end of the exercise. So what asset managers do is they actually have the view to have an inflation-beating outcome. So what they're striving to do with your money is to say, well, what is the inflation rate? Let's say it's 6%. So that is our first marker. And the reason that being the marker, then it keeps your money real. In other words, although it might be growing, the purchasing power of your money will remain the same. So really important to understand the asset class that you're in. And then secondly, what is your asset manager trying to do for you? Well, he's trying to beat inflation by 3 or 4 or 5%. The higher it is, the more risky again, the outcome at the end of the exercise. But again, as I mentioned right in the beginning, time in the market as opposed to time in the market, really important.
Amazing. And so to then go back to what you then spoke about earlier, with diversifying one's investments and their asset allocation, what are some of those things that one can do to ensure that when risk does occur or they face situations like that, they're protected because of how they've allocated?
No, very important. I think, again, start with the end in mind. So what are you trying to achieve with your investment? I want to beat inflation. I want to retire successfully as far as my capital is concerned. I want to give you a really good example. I think back in 2020 when we had COVID, you would have seen that the market actually came back quite dramatically, about 20% if I remember correctly. A lot of our members actually wanted to get out of their portfolios and move to cash. Because they felt that was the more secure investment choice for them at that particular point in time. Now, we were trying to stop them from doing that because, as I said, time in the market, very important. And the market actually recovered within 9 months. It was where it was before, and we had incredible returns over the course of that year. So again, importantly, sometimes doing nothing is doing something. So by not switching, you would have been in a much better position than, in fact, if you had switched out of the market at that particular point in time. And
then healthcare, right? So big concern, costs are increasing. There's a lot going on in that field. Now, as someone who is interested in maybe, diversifying your investments and looking over your money, how can we work around these increasing costs to still be able to play in the game?
So I think one of the most unfunded not only from a society point of view, but from a personal point of view, retirement planning, first priority. Second priority, very, very close to first, would be healthcare. Okay. Now, the important thing there is that when I say underfunded, it simply means people don't put enough money away for retirement, particularly to take care of their healthcare needs. And if you think about it, the older you become, the more you need medical care, right?
Yep.
Okay. Now, when you're actually building your retirement fund, it's important you can use, for example, a tax-free savings account. Start funding now to build a kitty of capital that at the end of the day, when you do retire, one, you've got some capital that will take care of you in retirement, or two, if you haven't done that, make sure you understand the medical aid environment. Now, what I mean by that is that often folk retire, they say, well, it's too expensive to have medical aid. I can't afford to do this. And they find themselves in a very short space of time ending up in a dire situation where friends, family have to help out, particularly with medical costs. So it's a huge detractor. Although you might have saved well for retirement, you find your capital could be very easily whittled away if you haven't prepared properly for your medical aid needs.
And then longevity risk. Very interesting concept.
Sure.
Tell us a bit more about that. How can I ensure that as an individual interested in this, that I outlive my own investment so I'm able to maintain?
Well, 100%. So I think the important thing here is to understand longevity is not necessarily old age. I'm not living to 90. You could actually outlive your capital very shortly. So what longevity risk really means is focusing on having sufficient capital to give you a sustainable income for as long as possible. Now, what that simply means is you need to have a budget in retirement. So when you're approaching retirement, know what your number is. So what income do you need in retirement? Is it 10, 15, 20,000, whatever? And have I got enough capital that can actually provide me with that amount of income? In most instances, what we find happening, folk don't have enough capital and their income need is too high. So right from the outset, you're actually utilizing some of your capital, which obviously means your capital is going to run out at some point in time and you're still going to be around. Huge problem to be in here.
And then something that's really important, we touched on it a bit earlier on, is speaking to a younger audience. Obviously, there are people that are going to listen to this that know the game, but there are a whole bunch of people like myself that are entering the game. What do you say to those people?
So I think importantly is to start early. Don't wait until you're in your 50s, kids are out of the house potentially. We'll talk a bit more about that a bit later. And you think retirement for old people. It's not for old people. It's for you starting out in your career, that very first contribution you're making towards your retirement fund. Don't spend it. So if you're moving from one job to another, don't think that, okay, now I've got some cash available. And Two-Pot would have talked to that. I think Xander and you will be having that discussion. Just to prevent folk from actually spending their capital. So start early. That compounding effect has an amazing impact on your retirement outcome.
So now we've spoken about quite a number of financial related risks, and we've gone into that. But there are also quite a number of other things that one needs to be mindful of and pay attention to. What are some of those other risks?
So I think divorce comes to mind. As South Africans, I think 1 in 3 folk, if not more, getting divorced throughout their lives. And the impact of that, one can laugh about it and say, well, marry early, divorce early, you're going to be okay from a retirement point of view. The problem sits where you're married for a long period of time. This is a reality in South Africa. You find that you've got nothing in common. Kids are out the house, you're close to retirement, and you decide you need to part ways. Now, if you haven't properly prepared for that event, you could find that it could be devastating from a retirement point of view. So one would be loss of assets. So if you haven't, if you don't have a prenup, as an example, 50%, potentially 50% of your retirement savings is gone. A protracted legal sort of battle. You don't want to agree on anything. The lawyers are doing well. They're making some really good money out of you. So not only are you losing potentially 50% of your portfolio, but you're also paying a huge bill from a legal point of view. And then, equally important, what is going to happen post that event. So again, if you're close to retirement, you might have to pay maintenance. You might have to pay children's maintenance, and that might continue for a long period of time. So, unfortunately, getting divorced close to retirement is and in retirement, in fact, often you find folk do retire and they're getting divorced soon after that. It really is devastating, and your lifestyle changes dramatically. So I think the strategy you need to think about and the way you need to approach this is right in the beginning when you're thinking about getting married, and you're writing that absolutely writing that prenup. Think about whether you want to include your retirement funding in your prenup. That might be one way to secure and keep you sort of secure in your retirement. The other way to think about it is that, again, it doesn't always have to be your retirement fund that splits. So are there any other assets that you could actually split at that point in time to protect your retirement fund? Equally important. And then make sure that post your divorce, your legal agreements are in place, and there's no secret little cash payment you need to make at some point in time. But divorce critical. I've seen lots of friends and who've gone through this, and it's not only financially devastating, it's emotionally devastating
as well. And then something interesting that, a term you touched on off air, sandwich generation.
The sandwich generation, yeah. 100%. So this is a huge problem in South Africa and a huge risk to retirement savings. So the way you need to think about this is that many folk have got adult unemployed children, okay? Number one. So those children, you're approaching retirement, you're close to your 65, you're at retirement age, and you've got a 40-year-old son or daughter at home that are unemployed and cannot get work at some point in time, and are relying on you to actually support them, right? So that's the one aspect. The other aspect is to think of it from the point of view, your parents have retired, that longevity list, they're good in their old age, they're living well into their 80s, early 90s, and they haven't prepared well for retirement. So now you're trapped between having to support your adult unemployed children and support your parents in their retirement. So I think it's a very emotional state that you're in, and importantly, the one way to mitigate this is to actually have a tough conversation. And have the conversation with your children to say, look, I'm here, I'm supporting you. This is the period of time I'm supporting you for. This is how much I'm going to support you with, and know that it's going to end at this particular point in time. Because I've seen families that have been too soft, and that continues, and suddenly the father finds himself in retirement, not properly prepared, and now he's stuck. So that whole sandwich, you're in the middle, having to support, as I say, adult children and parents who can't afford to live in retirement.
And then, in closing, I want to ask you this. So from a personal perspective, right, as someone who doesn't have a financial background in terms of education,
sure,
I went into media, and I'm looking at this and I'm like, there's a lot of information, there's a lot of terms. Where does one start gaining this knowledge? How do you walk that journey?
So I think, importantly, you need to, and I'm sure the team would have already spoken to you about this, it's important to find somebody that you can partner with, somebody who understands the financial environment landscape, can guide you, properly in terms of your future, who's trusted, and can has, from an Alexforbes point of view, our outlook towards financial planning is advice-based. It's not product-driven. So when you come and sit with us, you'll know that we've got your best interests at heart. Yep. And whatever your needs are, from a planning point of view, from a financial point of view, from a structural point of view, whether you're doing a estate, you're setting up a contract for your pending marriage or whatever, we can at least guide you or partner you with the folk that we trust to work with at that point in time.
Rob, thank you so
awesome.
much. This
Thanks,
was amazing.
Nice meeting you. Thank you very much.
And so you've heard it over there. Managing risk and knowing what you're getting into before you get into it is very important. Alexforbes always has your back. Be with us again, Money Focus, next time. Thank you.